Daljeet Singh Kohli joining in on the show. Hi there, good afternoon, Daljeet. Let's start off then with what you made of ITC's quarterly show. A mixed bag. By and large, brokerages continue to remain positive, but a very slow mover. The stock down about 2.5% in today's trading session. What are you anticipating?
We don't cover ITC, and we don't have ITC in any of our portfolios, precisely for this reason that for last many quarters they have not been performing as was expected by the market. Their dependence on cigarette continues. There have been many talks about non-cigarette FMCG business taking over or getting preference over cigarette, etc. But all said and done, in last many years they have not been able to do that. And in case of FMCG also, if we see many other smaller companies like Dabur or Marico, they are growing much faster. So despite having the reach, despite having a wide portfolio of products, they have not yet been able to do justification to their capabilities probably. And that's the reason why the stock has not been performing for many, many years. All this rumor about some demerger, some value unlocking, we always thought that it was more of a speculation and more of a rumor. So there was no point reacting to that and no point expecting that also. And therefore, for us, this was a non-event. We will wait for the company to change its ways of thinking and show that in terms of numbers, in terms of management's commentary, etc. As of now, it seems that they are happy with what they are doing, and with this 4-5% growth on cigarettes, 5-7% volume growth, 5-7% pricing growth. They're happy with that. They're continuing. So I think the stock will also languish along these lines. If I just remember, the similar kind of activity was there in stock of Britannia for many, many years, because the management was not doing things which market wanted, and it remained languished for many years. When there was a change at the top level, then we saw the kind of movement and the way the stock lasted. I think that right moment has come for ITC, but we have no indication, we have no idea whether anything is happening or not happening. So for us, there are better opportunities in FMCGs. If I just tell you, as a disclosure, we have one stock on FMCG in our portfolio, which is Emami. And the thesis behind that is that they went through a very bad patch for last 2-3 years, but management has come out very strongly. They have taken the remedial steps as required, and they have maintained their market share, gaining market share, plus a play on rural, urban, both the things. So I think Emami is well placed in terms of valuation also, in terms of the management's behavior in the adverse situation. That's more important for us, because over the period when things will go normal, these guys will be the ones who will perform much better. So that's the stock that we have in our portfolio.
Take a look at the intraday chart of Muthoot Finance. The company just, I think, a couple of minutes ago delivered its fourth quarter numbers, growth in NI, growth in profits, and a sequential dip in provisions and impairments as well. Let's delve a bit more into the entire NBFC space. Daljeet, hi, good afternoon. You know, I think Muthoot stands out because it's in a more niche segment, gold loans, and this was one category of loans that was immensely popular given the fact that gold prices had risen, and then of course you had the entire cash crunch situation, unfortunately, that a lot of individuals were facing. So this is something that I guess Muthoot Finance from a fundamental perspective did tend to benefit, I guess, quite a bit, and quarter after quarter as well we saw I think numbers being largely very strong. So what's your take on that? And, you know, since we are talking about NBFCs, I'd like to add on one more question. Do you see asset quality stress in the NBFC segment more so than, you know, some of the banks?
So first on Muthoot Finance, we have positive view on that, although it is not a part of our portfolio as of now. Amongst the financial companies, we only have large private banks and Bajaj Finance and Bajaj Finserv as part of our portfolio. Now, view is positive on Muthoot Finance. Purely what you said is 100% correct, that they are into a niche segment and their asset quality has always been good. But taking a cue from what Manappuram has done this quarter and the kind of auctions they had to do for the smaller borrowers because they were not able to repay. Now, that's not a good sign. That shows that there is a stress in the lower strata, and that is likely to only increase because of this COVID situation. We can only see probably Muthoot is catering to little slightly higher segment. That is why they have not seen that kind of reaction this time. But if the system is going through this, then obviously there will be a problem for all these companies. For the other NBFCs, similar like rural based or rural focused NBFCs like Mahindra and Mahindra, etc., they are continuously under stress for so many months, so many quarters, and they are likely to remain like that because this time we have a COVID impact even in the rural areas. So amongst the NBFC space, if I have to look for, I think Bajaj Finance is the only one which stands out because it's far more granular. It has a lot more fee-based activity. It has a lot of technology advancement there, and its capability to handle being by virtue of being big size to handle such a stress is much better. Therefore, Bajaj Finance is the preferred pick there. Within the financial services, if we say, then the insurance will be another sector where one can look at. So we are seeing health insurance picking up very strongly, and general insurance therefore will be an area to look for. Same way in the life insurance, the penetration levels are very, very low. So those two, as HDFC Life, ICICI General Insurance, are also part of some of the portfolios.